Okay, g'day everyone, and welcome to this afternoon's chat room, which is on supply and demand of critical minerals. I'm Ryan Henrahan, I'm Director of Wave International, and hosting the session this afternoon with Jessica Robinson from the Critical Minerals Facilitation Office here in Australia, and Harry Fisher from CRU, a well-known industry analyst. So we're here this afternoon to talk about the supply and demand of critical minerals. Just a bit of feedback from yesterday's chat rooms for everyone listening. It might be a good idea if you've got specific questions to start throwing them out through the session. Yesterday they kind of backlogged a bit towards the end and it was hard to try, and it was a bit of a mad rush. So if you've got some questions, please feel free to fire them through ahead of time. We're going to talk for about 20 minutes on a few topics, and then we'll be open to questions for the back 10 minutes of the session. So look, just kicking off, we might throw over to Harry briefly and get a couple of CRU's key thematics about supply and demand in the critical mineral space, just in a broad sense. So Harry, yeah, what's on CRU's mind at the moment amongst where we are and where we're going?
Sure. So firstly, good afternoon, everyone. Thanks for joining us. So kind of looking more directly at the battery story and how that encompasses some of the critical minerals that we'll talk about today, just setting the scene on the demand side. I'm sure many of you are familiar, but I'll just give a kind of a brief summary of where CRU are looking over the kind of the medium to long term. We're seeing the inflection point of EV demand in the kind of the mid 2020s, and that's when internal combustion engine demand will peak, and EVs will start to really ramp up in their popularity. To date, it's really been availability of those EVs that has been the bottleneck rather than demand itself. And we're starting to see a shift there from the OEMs really committing to production at scale over the next 10, 20 years. And the kind of the technology driving those EVs will be more nickel intensive cathode types, predominantly the NMCs and then the high nickel intensity versions of those. So that's leading down the kind of the nickel, manganese, cobalt minerals and also lithium. On the lithium side, that's really favouring lithium hydroxide, which is a good story for Australia and those spodumene producers. And we're seeing lithium hydroxide demand really start to pick up over the long term and actually overtake the kind of the traditional carbonate demand from South America and the like. So that's kind of a broad overview of the demand side picture, as I'm sure many of you are familiar. Looking a bit more at the supply chains themselves, which I think we'll touch on as we go through this session. Even before the instability of COVID through this year, a lot of these supply chains have been very heavily reliant on a number of countries and regions, and particularly China, of course, particularly on the chemical side for lithium, nickel, and cobalt. And rare earths, which Jessica will pick up on, but also, of course, the DRC. So I think this year has really shown that a lot of those supply chains are very fragile and very over-reliant, and we kind of need to see a bit more diversification to enable some security in those supply chains going forwards. So for me, that's kind of a big theme at the moment that I think we'll talk through a bit more today. How those battery supply chains will change going forwards, how we'll see some different regional pictures, and then maybe there'll be a little bit less over-reliance on China. So that's kind of taking into account the post-COVID world, but also kind of the underlying political tensions that we've seen in the last few years and obviously intensify in recent months. So that's kind of the broad picture for me, and a really interesting thematic at the moment in the critical mineral space. And I think it presents some great opportunities for Australia as well.
No, fantastic. Thanks for that, Harry. That's a really, really good context. So maybe throwing to Jessica, and I guess Australia's been blessed by Mother Nature with a large base of natural resources within our borders. So maybe just in the first instance, thinking mainly about the natural resources, how's your office looking to facilitate the supply side of the equation against sort of the commodities and the drivers that Harry's just spoken about?
Thank you, Ryan, and good to be with everyone. So head of the newly established Critical Minerals Facilitation Office, which the Australian government set up on the 2nd of January. And I think the introduction Harry's given is quite useful for me, because we're working both on the supply and demand side here because of those really complex geostrategic issues, concentration of supply chains that obviously pose risks for governments like Australia in terms of sourcing the end products that rely on those critical minerals, but also, as you've beautifully outlined, provide a really good opportunity for Australia to help diversify supply chains and potentially move further downstream. So I might just give a bit of a higher level overview of what we're about. So recognising those concentrated supply chains and the risks posed, the Australian government decided we needed a much more coordinated approach to both develop our supply capacity, but as I've mentioned, really to try and tackle where the hot points in supply chains are, which is usually in that downstream processing and particularly, as we all know, in the rare earth supply chain and lithium too, in terms of that next stage processing. So the job of my office really is to work across the whole of the Australian government, with state and territory governments, with industry, the research sector, and particularly our science agencies to unlock not only the natural resource potential, so working with agencies like Geoscience Australia, which has amazing capacity to really identify where key reserves sit and the most economic way to get at those resources, but also to look at those opportunities to take critical mineral projects further downstream. And what our vision is, or our mission is to try and establish Australia as a hub for precursors for batteries, magnets and alloys. And I think that sets us up for a really good stream of work that is around developing the resources, but also looking at that capacity to build whole industries around downstream processing. So to help deliver that supply, we have a range of work in place with states and territories, which will hopefully streamline regulatory approvals to help projects move a little bit quickly through the regulatory process. We have mechanisms, government financing mechanisms that we can draw on to help fund projects. Part of the complexity that we're all familiar with in terms of moving these projects further downstream is that concentration, meaning that the commercial markets aren't necessarily ready to wear the risk at the moment of jumping into setting up alternate sources of supply. So having vehicles that allow us to help bridge the gap between commercial viability and meeting that strategic need to diversify supply chains is really important. The other huge area of work is on the demand side, and that's working with key international counterparts, so some of our key trading partners and strategic partners, to help identify opportunities for Australian projects to directly feed into the manufacturing base in those countries. And so we're doing a lot of work to open up markets for our critical mineral projects, and recently announced the signing of a MOU with India. And India, I think, is presenting itself as a really good new opportunity for Australian projects as they seek to really bring online electric vehicles and develop and batteries. So I think already very good opportunities for Australian projects in the EU market, in the US and Japan and Korea, but I think starting to look at some of those emerging markets is really, really important. I might leave it there.
Yeah, no, that's great. There's obviously a lot going on. One thing you did touch on, which is a difficult topic, is rare earth elements. Just on the demand side, with the work you've done, have you got any comments on where the demand side market is, specifically in terms of your research around the use of rare earth magnets in electric vehicles as opposed to non-rare earth magnets? Are you able to comment at that level on rare earth?
Yeah, probably not down into the specifics of exact supply chains, but absolutely. So rare earths is a huge focus for my office. because of the important role that they play in magnets. So obviously the defence intersection here is quite important too, in terms of where some of that product ends up, but a huge potential for our projects to be producing rare earth elements into that magnet market. Japan is a huge trading partner for Australia, and we obviously already have a really good track record of working together to support companies like Lynas, and Lynas will be looking to move its cracking and leaching process back to Australia, to WA, and that type of movement in the market is quite important for signalling, I guess, Australia as a real potential to do more on rare earths. We've got a huge number of projects in WA and in the Northern Territory and in New South Wales that are highly prospective, and I think where we have an advantage in Australia is we're able to bring to bear, I guess, high grade commodity with top-notch science and technology. So it's the combination of those things, I think, that will really set Australia apart in terms of being able to develop the rare earth capacity.
Yeah, I mean, we're quite heavily involved in the rare earth sector, and I guess we're watching the market quite closely. Just to comment on that, in that, you know, I think there's a bit of a two-way street there within the OEMs committing to rare earth magnets throughout their fleets, but also being able to actually have the confidence that those supply chains are in place to make that commitment. So we see a bit of a chicken and egg at the moment, that if somehow, and perhaps that sounds like something that your office probably works on, is if we can get confidence to the OEMs and you get the OEMs to commit, then we can all move forward in that space. So that's probably our view of that at the moment.
Yeah, absolutely. I think, and that's why we're tackling this problem from both the supply and the demand side. There's no point us having amazing projects, developing all the technology to take them downstream without the right demand signals. So that work to line up good offtakes, the potential for strategic partners into Australian projects that will lock in the supply for that manufacturing is really, really important. They've got to work together, and I 100% agree with you. That chicken and egg situation is extremely difficult. It's the same with the problem of unlocking project finance, that the need to kind of lock in offtake and project finance. Projects find themselves in this tricky spot with a really opaque market, a lack of price signalling. So tackling all those issues at the same time is what we see is going to be really the effort required to really make a difference.
Yeah, it sounds like you've got the easy job there, Jessica, in facilitating that. We'll just, we've still got a little bit of time, and there's a couple of other topics that I think would be useful. And one, Jessica, you've already touched on. I might throw to Harry for a second. The talk of downstream, you know, Australia's traditionally been a dig and ship kind of model. It's simple, it's easy, it's made us made our economies hum over many, many years. But now there's a trend to move downstream across a number of commodities, and particularly in the critical mineral sector. I mean, vanadium, you've really got to go downstream. Lithium, Australia's got a lot of investment going downstream. Graphite, there's a number of projects looking downstream. So, Harry, from your point of view, in terms of what you see in the dynamics, what do you see about how downstream chemicals or whatever might be traded, or how they might be seen as opposed to raw commodities? Do you think there's do you think that is a fit or an opportunity for the more integrated model to come in and bring some efficiency to the supply chains? Or is it going to be a bit too difficult? Do we think that the normal dig and ship to an intermediary to an end customer is more the model that you know, might be preferred in the industry? Do you have any comments there?
Yeah, sure. I'm focusing specifically on lithium as an area where I've looked at in a little bit more detail. As there's a lot of spodumene concentrate production in Australia, but most of that just gets shipped directly to mostly China. And at the moment, most of those producers are reliant on China, as I touched on earlier on. But there are a couple of, as you said, a couple of downstream projects or existing capacity in place that are fairly well developed. And I think that the reason for that is that there's a few different reasons. The first is that obviously you get some value add as you go down the value chain. You benefit on cost if you have some downstream integration or vertical integration in between your spodumene production and your hydroxide production and on the lithium side. You've also got improved quality of that end chemical product, which is really important, particularly for high performance end users such as the higher end EVs. You've got security of your supply because you know where your spodumene is coming from, you know the quality of it, you know that it's consistent. And also you get some differentiation of your project. There's so many lithium projects out there, but if you can prove that you've got kind of a broader area of the value chain covered, then that's really good for the investment point of view. I think another interesting thing to think about as well is there is an ex-China hydroxide premium in the lithium space. And that can be really beneficial to some of these Australian producers, and I think that's why we're seeing a little bit of movement in this space. They can produce hydroxide, they can sell it to Japan, Korea, Taiwan, that kind of region, and they can actually get a premium on the price they're selling at. So kind of from the work that we've done looking in detail at lithium chemical costs globally, the Australian projects that are out there will be really competitive. On a global level, and they really benefit from some of those areas that I touched on in terms of that vertical integration. So I think in the lithium space, definitely, I think this is a theme that we're definitely going down the road. We're seeing Wesfarmers are going to make a final decision next year on their project, and there's obviously a lot of idle capacity in WA already. So it'll be good to see that develop further, and I think as I touched on earlier on, we're going to see some reshuffling of those supply chains, and maybe there'll be a little bit less spodumene going directly from Australia to China, and some of that will be going into hydroxide and then go straight to JKT.
No, that makes a lot of sense. And maybe just with a couple more minutes before we start getting into the audience questions on that, I think, Jessica, you might have mentioned it before, but just thinking about the emerging market in Europe. So if I might get a comment from both of you in the next 3 minutes. Harry, have you got any general comments around the European EV market and and what that's looking like into the future? Because it's quite small at the moment, but it does look like it's relative to where is now could be quite a big growth area.
Yeah, sure. So I'll keep it quick so Jessica has a chance. Going back to something we touched upon earlier on, it's really the OEMs that are defining how this goes forward. Well, when we see some commitment of EV capacity in Europe, then the whole supply chain going backwards will really develop. And we're starting to see that. VW have committed to 22 million electric vehicle units over the next 10 years. And they're really trying to target Tesla's share of the market. And I think we'll then start to see some battery assembly going into Europe, some cathode capacity going into Europe. There's already quite a lot of good quality nickel and cobalt units in Europe itself. There's a little bit lacking on the chemical conversion of that. But I think if we can get the commitment from the OEMs, then the whole supply chain going upstream from there will really start to develop. And CRU's expectation is that the EV demand will actually in Europe will be equal to China from next year onwards, and those two will definitely be the two major markets in the next few years. China will start to pick up a little bit in the 2030s, but Europe's really going to be up there, and it doesn't really make much sense for the full supply chain to be in APAC when there's so much going on in Europe.
And Jessica, how do you see, from your point of view, how do you see Australia participating in that European supply chain story, or where do you see discussions heading?
Yeah, look, we think Europe's a huge potential for us, and we think we offer a lot to Europe. So one of the key drivers for European manufacturers in terms of sourcing raw materials is making sure that they've done their due diligence and that their sources of supply are sustainable, ethical, and meet high environmental standards. So from a perspective of being a supplier that can meet those high standards, I think Australian projects are in a very, very good spot to neatly fit into an emerging EV market in Europe. And I would agree with Harry. Our chief economists here in the department, they project that over the next few years we'll start to see a doubling of the export value we get from our lithium producers. So, and that is partially on the back of growth in the European market. So we think it's very promising. There's obviously a bit of a lull at the moment, but I think that was well explained in terms of where that lull is in the vehicle manufacturer. And at the moment, we've got projects that have slowed production a little bit, but are very ready and capable to step up to meet that demand. And I think, as Harry's pointed to, seize that opportunity to go further downstream and deliver directly into those markets.
Yeah, we definitely agree with all of those sentiments from where we sit. So no, thanks for that. Well, look, we've got 10 minutes left, sorry. So we have had a few questions come through. I see one quite interesting one here that's probably wasn't on my radar, so it might be interesting to throw it out there and see how we go with it. The question is, what's the panel's view on uranium? Has the time finally come for uranium, as we've had many false dawns in the last few years? So that's an interesting question. I don't know, Harry or Jessica, if one of you guys want to offer a couple of comments on that first, on how you see uranium fitting into this sort of dynamic.
I think I'll throw that one to Jessica, if that's okay.
I was going to do exactly the same. Look, I have to confess, I don't have a lot of expertise on that because thankfully for a tricky question like that, it's not on our critical minerals list. We obviously touch on some of those aspects, particularly where we talk about thorium and radioactive waste when it comes to how we manage critical mineral projects go downstream, but the work of my office isn't directly locked in with the development of the uranium market.
I think one quick comment from me. I was at a conference in Perth at the back end of last year, and there was a lot of talk about uranium, and it does seem to be this thing that's always the next big thing, but it hasn't quite become the big thing yet.
And I guess, look, probably the only context for me that's springing to mind was, there was a Queensland Mining Club, I think it was, a panel discussion on the power market here late last year around November. And the general theme, as I remember it, was that uranium and nuclear energy is really more of a sort of political, in the political spheres rather than in the technical or supply demand sort of related spheres at the present moment, and that's probably where it looks like it's going to be for some time. So yeah, it's difficult for us as technical people to really comment on the politics, but yeah, super interesting question. Don't really quite know what the answer to that one is. Have another question here, which Jessica will be happy with. It's directed straight at Harry. It's question is, do you feel that some of your comments that you've made before apply also to vanadium, as vanadium applies to both batteries and even steel production in Australia? So yeah, Harry, do you have any sort of comments on vanadium and the thematic around that at the moment?
Sure. So I think the demand side is broadly part of obviously the same thematic. It's slightly different dynamics to the kind of the core battery metals, of course, but in terms of storage and that kind of thing, I think there's definitely some great upside potential for vanadium, of course. So our expectations are the kind of the non-steel applications of vanadium, so the likes of chemicals, batteries, and aerospace applications, they're about 10% of total demand at the moment, and we're thinking that closer to 30% by 2030. So that's a great upside potential for the vanadium space. The steel growth is obviously not nowhere near as big as that, but it still makes up the chunk of demand. And I think obviously vanadium got really interesting a couple of years ago when China changed their rebar standards, and we're not seeing any particular change in that going forward. So as China continues to pump out steel, which they seem to be incredibly well, even during COVID, that there's some great base for demand there. Just flipping over to the supply side, we obviously haven't got any production in Australia at the moment, but there's a few really good projects out there. We're thinking that Windy Murrow should be restarting next year. There's 3 or 4 other kind of fairly well developed projects, the likes of Mount Peak and Speewah. And then we've also got some in the really early stages like St Elmo. So there's some really good stuff out there for Australia. I think if the demand story keeps developing, then as we touched on earlier on, there'll be a kind of enough confidence to get those projects moving.
And not to let you off the hook completely, Jessica, I'm actually quite curious on this one. From your office, I know you're sort of focused mainly on the international markets, but have you guys done much work on the demand side for the Redox flow battery and anything onshore with respect to the Redox battery?
I think that's actually a really exciting area. And I think when you opened up and talked about COVID-19 and Harry too, and the growing awareness around the risks in supply chain, I think that conversation has also highlighted opportunities for domestic growth in manufacturing. So there's a strong, I think, momentum building around the capability of mineral projects to feed directly into that kind of manufacturing potential in Australia. So Vanadium, I think, is a really, really good example as an opportunity to look at how we can directly leverage off the natural resource advantage we have to feed directly into that sort of battery storage, renewable energy story, and how that again then feeds into producing renewable sources of energy for downstream processing activity. So there's a really nice picture emerging, I think, and I think we're in a right time, right place to seize both the domestic opportunities as well as the international ones. It's the combination of both of those things, I think, that make these projects economic.
And we've got about 3 or 4 minutes left, and a couple of other questions have come in on vanadium as well. We must have a bit of a vanadium-centric audience here at the present moment, but there's an interesting question here, and I might ad lib on it a little bit, going back to a comment that Harry made earlier. So the question was around with large-scale and low-cost vanadium production in China. And the market pricing, do we think that Australian projects can become commercially viable? But I guess my ad lib on that is, do you think, as you commented with lithium, Harry, that there could be a premium for, a non-Chinese supply or an Australian supply of that product to help us with respect to maybe our cost base? So if I get a comment from you, Harry, and then maybe I'll throw to 1 more minute from Jessica on how you see the supply side for vanadium in Australia fitting in the global competitive space.
Sure, I'm not an expert on vanadium pricing by any means, but I think from kind of a purely economics perspective, I don't see why a similar premium couldn't develop in the vanadium market. I think, as I said earlier on, some of these supply chains are already very fragile, even before COVID, and I think a lot of these end users in very high tech and expensive end use applications are looking for stable, secure, ethical source of those raw materials, as Jessica touched on, and that leads perfectly into demanding a premium, whether it's regional or supply chain based. It's seen in a lot of other commodity markets that we cover at CRU, and I don't see why it would be any different for vanadium.
Anything from you, Jessica, on where you guys see the Australian projects fitting into that competitive market with the minute we've got left?
Yeah, absolutely. So I think again, it comes back to the combination of not only good reserves and resources here, but the ability to lock into technology which will make the process more efficient and cost effective. So we have a number of projects that are really on the cutting edge of starting to develop new technologies to allow that extraction and separation to occur in a more efficient as well as environmentally and sustainable way. So I think it's the kind of modern way of mining really is to look at those opportunities to reduce costs through technology solutions. So I think we're in a really good spot to really seize that opportunity.
And just as we're probably about to get cut off, there was one question there about the list of critical minerals Jessica's office is looking at. Yeah, there's certainly a website for Jessica's office, and a lot of that information's on there. Is that correct, Jessica?
There is, and please, if you haven't already subscribed to our newsletters, go onto our webpage and sign yourself up. And we do keep, hopefully, people informed fairly regularly around some of these developments. So the webpage, the newsletter, but in terms of, I guess, the critical minerals we're focused on, Australia has a public strategy. It talks about 24 minerals. There are a number that we are particularly focused on, and they're the ones that we see as Australia having significant opportunity through battery, metal, energy metals, and magnet production. So we are focusing our efforts around those opportunities.
Fantastic. Well, that's it, guys. We've had the bell rung on us. So many thanks, Jessica, and many thanks, Harry. Hopefully everyone got